I'm always loath to say we've seen the last of something because that's a very difficult construct. But I do think that the markets have shown some willingness to reassess the type of IPOs that they're willing to buy. Unicorns refer to a very specific term. Obviously, they're a fictional character, and in a sense, the rarity at one point of seeing private companies with valuations over $1 billion led them to be called unicorns. Over time, they became less and less rare, so that may not be the best way to think of them, but markets started to put huge valuations on quick-growing private companies. The problem with those became, as more and more rounds of financing were done, particularly on companies that had great sales growth, great top-line growth, but ultimately no profitability, and in some cases a very difficult path to profitability, the market kept doing new rounds of financing to keep their business going, and each of those rounds of financing was done at ever-increasing valuations. And so you led to situations like Uber and Lyft, which have tremendous sales growth, tremendous mind share, but ultimately don't make money on a per-ride basis or overall. The market actually showed some real reticence at financing these companies. Basically, I would argue that the greed of some of the institutional investors pushed the valuations so high that they were unsustainable when they were ready to hit the general public. That's also, I think, the situation that we see with what appears to be the failed WeWork IPO. The last round of financing valued that company at $47 billion, but ultimately it's a company with a huge cash desire. They basically need to pay all these leases, and they essentially needed the money, and the problem became the market. Once it had access to all the financials, realized that the last round of investors had overpaid, and ordinary investors were not willing to pay the prices that had been seen in the private market. I don't think this kills the concept of the unicorn, and I'm going to use this being the WeWork IPO and let's say the lackluster performances of Uber and Lyft and some of the others. There are always going to be private companies that have sport high valuations that will come public, and many of them will be great companies. That's the nature of the free enterprise system, and that's really the purpose of the stock market. All the churning on the day-to-day stuff that you see is really to provide liquidity so that companies can then sell shares to the public and have a robust public marketplace for those shares. So I don't want to say that we'll never see another unicorn again. I think that's unrealistic. I do think, though, that the markets have become much more discerning about when they are the buyer of last resort. Have the buyers in the private marketplace sucked so much of the valuation out of the company that there's really nothing left for the ordinary investor. I do think that will change. I think the bankers and I think some of the private equity and venture capital investors may be a little quicker to pull the trigger in terms of bringing their companies public and not necessarily trying to maximize the valuation in the private market, and might actually let the public markets have a better role in doing that for themselves.